Funny Shekhar, fund manager with Angel Stockbroking, he joins us live now. Funny, good morning, thank you for joining us. Funny, what do you want to start with? The fiscal cliff problem, why Japan is outperforming, or what could happen to Indian markets in the next 1 month?
Good morning, Nikunj. To my mind, fiscal cliff in the very near term is overblown because the actual impact of the fiscal cliff will only be felt starting 1st of March. So even though technically on paper the US economy will fall off the cliff starting 1st of January, but the reason why you see this brinksmanship being played up by both sides, Democrats and Republicans, is because they know that they effectively have another 2 months to bargain. Because that is when you will actually see US start to default on payments to bondholders, and then it will be followed by default on pensions and so on and so forth. So I guess some kind of deal will be struck after the lawmakers return back from their vacation, because I believe that a large part of White House is on vacation now. So come second week of January, you will seriously start seeing some kind of resolution towards this. So I guess in the very near term, there might be some volatility related to sentiments, but I'll be very surprised if it leads to a major correction either in the US market or in the emerging markets. So I guess Indian markets will continue to benefit from global liquidity as they have been for the last 3 to 4 months, and with the government talking again tough on some of the reforms, I guess it will add that additional flip to the market, which means that the market should more or less be in a good shape, broadly above 5,800, and even if it slips, so as we have always maintained, there is a quite a durable floor to this market at around 5,400 odd. So investors with that in mind can always keep on investing even on declines. So I would say broadly it's an excellent market for stock pickers and investors.
Funny, what's the expectation from Bharti Infratel?
See, the response to the issue was not at all good, irrespective of the management holding out promises of great future. So I would tend to believe that it might have a very muted listing. And anyways, from the time that it lists to the first 1 month, it is not a true reflector of where the fundamentals are. Over a period of time, I do believe that in the absence of any inorganic moves by the company, it would be very difficult for them to sustain even the listing price.
If I map the environment, whatever could go right for large cap IT is going right, which is US economy is recovering, Europe has stabilized, and there is definitely some degree of currency tailwind. But despite a constructive big picture, why are large cap IT stocks underperforming? In fact, for the year, it's not the metal index, it is the IT index which is clearly emerging as the worst performing index.
Well, on a year-to-year basis, you're right, but it's been all over the place. So in the middle of the year, it had outperformed. But the larger point is what's the outlook for the next year, and that's where one is not getting a lot of confidence, because as far as large caps are concerned, this easy pickings of doing application development and maintenance is over. So they are now increasingly getting more and more dependent on discretionary spending, and that's where there is mixed signals that are coming from the market. So the last week of a couple of weeks back, you had Accenture and Oracle declare their results, and both of them though depend on discretionary spending in the form of consulting and new software licenses. Both of them reported varied outlooks. So there is a fair bit of confusion on what's happening both in North America and Europe. North America, things are improving, especially there is a lot of optimism on healthcare spends being revived by the government. But apart from that, from the banking and financial services segment is showing a fair amount of softness. So that's exactly where you had Cognizant, which had an industry-leading growth, give some kind of a signal on revenue growth fears, which has led to a significant amount of correction in TCS as well. At the same time, you have Infosys, which has been suffering growth pangs for quite some time, also underperformed. So the environment continues to be a bit confusing. I will not write off the environment as being outright bad, but it will still take us maybe a quarter or so in order to come back and see what's happening, because as you speak to companies today, Ideally, year-end, the budgets for the client should have been fixed, but as like last year, things are still in a state of limbo and companies have absolutely no idea of where things are headed, and this is something that you are expecting in the commentary that the companies will offer in the first to second week of Jan as and when results are declared. So I think you have to give them time, and only at the end of FY13 will you get a fair picture of what's likely in FY14.
Funny, we've talked about the metal space, last month as well. But an 8% uptick coming in this series too, what is it that you like, and is there still scope to make money?
See here, a lot is riding on a recovery in China, which explains why companies with international exposure like Tata Steel or Hindalco have been excited. So that's a space that is completely dependent, I guess, in the very near term on news flow, because one has to wait and see what kind of durable recovery China posts. To my mind, a 10% kind of recovery in the medium term looks unsustainable, and China seems to be on anywhere between 8 to 9% growth path. As far as domestic metal companies are concerned, there are severe raw material constraints, but I am seeing an opportunity within that space in the form of an NMDC, because it is gaining the maximum advantage of this raw material constraint being imposed even on miners such as Sesa Goa, because you have Karnataka, Goa and Odisha, whose mining output has almost shrunk to half, and a majority of that output now is coming from NMDC, and over the next 6 months there is a very good chance that India will turn into a net importer of iron ore. Because the iron ore output from Goa is not suitable for domestic operations, so that will anyway have to be exported. So the output from the rest of the geographies will not be sufficient to meet the demand from although this demand is not as buoyant from the domestic steel industry. So NMDC, which till now had an export-backed pricing, will now start enjoying import parity pricing. So I guess NMDC is a standout performer out there, and one has to keep looking for that.
Rupee is almost at 55. Do you think it's a matter of time global investors will take notice of that? $20 billion of fresh inflows have come in this year, and Rupee is still down 3.5% this year.
Well, that's certainly a matter of concern from a macro point of view for India. But as far as global investors are concerned, over the last one calendar year, it's not that Rupee has gone from 45 to 55. So the $20 billion have more or less come in this range of somewhere between 52 to 55. So on a currency point of view, compared to flows, they are not losing. But if global investors were to speculate on whether the currency would weaken any further, that might lead to a considerable amount of concern for them. But as things stand today, I think that Rupee will more or less stabilize at around 55 to 56, because Rupee has reached this level of 55 when you are seeing that the GDP growth has troughed. Inflation, for all the experts who have been calling for the decline in inflation for the last 3 years, I think it will finally come down to around 7% by March or April. So the worst of the macro concerns for India are behind us. The policy wheels have started moving. So there is the enabling environment for FDI flows is much better than what it was last year. So on a combination of developments in the real economy as well as sentiment, the worst is behind us. So to that extent, I guess this scenario for Rupee moving further above 55 or 56 is bleak. So to that extent, I think investors might not be too concerned.